Hey, what's up, guys? If you are serious about your finances, subscribe down below and turn on the notification bell because you're watching Boss Your Money with Anthony. Today's video is about where to invest your money. Everyone talks about how important investing is, but it's a little bit difficult to understand and have clarity on where exactly you need to invest and how to invest your finances. So in this video, we're going to break it down into three separate categories. The first one being your primary investments, which you have to do at some point in time. I've talked about how you need to make savings your main priority when you create a budget in my previous video. If you haven't seen that yet, I'll leave a card up there so you can check it out. So the second category is going to cover how you can invest your additional savings or additional income in any given month. So the reason for this is one, your additional income should not be spent on buying cool things for yourself. All right, it should be reinvested, but at the same time you want to get out of your comfort zone a little bit and invest in a little bit of high risk investing so that it has the potential to give you a little bit more rewards in the long run, but at the same time it doesn't affect you if you don't see the gains. Now the third category I'm going to talk about is investments that you should go nowhere near. All right, so let's get straight into the video. Okay, so the first category is going to be your primary investments. The first thing you need to do with your primary investments is to set up emergency funds. Now, this is said everywhere and everyone knows it, but not a lot of people do it. So I want you to go today and set up an emergency funds account. It should be a savings account. It should be liquid. It should be accessible at any point of time. And it should also be giving you some kind of returns. Savings account and emergency funds typically are not meant for your high growth investments. Don't focus on how much you're getting in return, but at the same time, don't keep it under your mattress. Your emergency fund should give you typically between 1 and 2% of returns per annum, and do not keep it parked without any kind of returns. Now, if you live in Dubai or anywhere else in the UAE, or if you're planning to move to the UAE soon, please check out my latest video where I talk about the best bank accounts where you can park your emergency funds. So I recommend keeping anywhere between $1,000 to $2,500 in your emergency fund just to start off with, and keep funding it until you can live off of your emergency funds for about 6 months. Now, the second thing I would highly recommend you investing is in yourself. And what I mean by that is it is very important for us to educate ourselves so that we in the long run are able to make better decisions financially. This will then in turn help you generate various streams of passive income and grow your wealth in the long run. Now this beautifully moves us into the third step, which is investing in creating alternative streams of income, so that you've created now multiple streams of income that generate you passive income every single month. The beauty about passive income is that once you've put in the work upfront, you then can sit back and enjoy the returns. The fourth thing I highly recommend you do is pay off all your high interest debts. If you're paying anywhere about 3.5% per annum on your debt, pay it off immediately. The first thing you need to pay off is your credit card debts because they have the highest interest rates typically. Now that you've done all this, my fifth recommendation is when you actually start investing in various investment related products. Now, one of the first things I recommend beginners do when they enter into investing is get into REIT. What is REIT? REIT is an acronym for Real Estate Investment Trust. So what REIT is that they own multiple properties, be it residential or commercial or any other type of property that generate revenue for them. So this saves you the trouble of saving up for your down payment, getting a mortgage approved, etc., etc. The advantage of getting into REIT is that the revenue generated by these entities are then shared with every single REIT investor, and you can typically look at earning anywhere between 5 to 6% on an annual basis. Now, the sixth thing I would recommend to you for investing is ETFs and index funds. Now, ETFs and index funds are quite similar. If you guys don't know what the differences are, please let me know in the comment section below so I can try to make a video on that for you shortly. So essentially what these funds do is that they track an entire index in your stock market. So for example, S&P 500. The advantage of investing in these funds is that Your profits and losses are based on the entire stock market's movement and not just the movement of one specific stock. So this is a relatively low risk investment that I recommend to everyone, because historically, if you see the long term charts of these funds, they perform very, very well. The seventh investment avenue I'm going to recommend to you is getting into mutual funds. Mutual funds are very similar to ETFs and index funds, except that they don't track a specific index. They are typically managed by asset managers who buy individual stocks, but using a pool of all of your investments. So that then allows them to diversify the portfolio and helps you get a better rate of return while also reducing the risks. The last thing I'm going to recommend you do with your primary investments is get into real estate. Real estate is a great investment. There is a slightly higher barrier to entry because you do need to save up for the down payment, but in the long run it's going to do you really well, because not only is there going to be appreciation to your property, but it's also going to generate you a monthly rental income. So let's get into the second part of the video, where I'm going to share how you can invest your extra income or your extra savings. Now, I want you guys to keep in mind that these are very high risk investments, but also have the opportunity for you guys to get very high rates of returns. I only recommend you invest in these products if you have that additional income or additional savings that you are not going to be affected by if you do lose it, because these are very high risk investments. And the first thing I'm going to recommend you do is get into the stock market. Don't invest a lot, just get into it, because there is an opportunity for you to really see high rates of returns. But as I said, there is a very high rate of risk involved as well. Now, there are two types of stocks. One is growth stocks, where the price of the stock is the only aspect that determines the value of the stock. So what I mean by that is, if a stock is worth $1 today, and if it's gone up to $2 tomorrow, you've now doubled your money. The second type of stock is dividend stocks. So what dividend stock means is that not only are you going to have the growth aspect, but you're also going to be earning dividends paid out by the company on an annual basis. So if you have a little bit of extra cash lying around, I do recommend you invest a little bit into dividend stocks, so that also brings in an additional stream of income passively. So the second option for you guys, if you want to do a little bit of high risk investing, is getting into cryptocurrencies. I will reiterate that it's very important to know that there is a chance that you may never see any of your dollars again. But as long as you have that mindset, and if the amount that you're investing is not going to affect you if you lose it, then by all means go ahead and try it out. The third thing I'm going to talk about in this category is gold. Now, a lot of people think that investing in gold is a very good thing. It's not. Because although gold is relatively stable in terms of market price, it is not necessarily going to bring you a long-term return. So what I recommend is that if you are interested in buying a gold coin or a gold bar every once in a while, when you manage to save that extra $100 or $200 in a month, by all means go and pick up a coin or a bar of gold. Now this brings us to the last part of the video, where I tell you what not to invest in no matter what. And the first thing I recommend you not do is getting into day trading. Day trading seems like a lot of fun, especially when you see these influencers post big increases in a single day or sometimes even in a single hour. It can be very enticing, but what they don't show you is the risk involved and how much you also can lose by doing this. None of the millionaires you will ever meet have made their wealth from day trading. So remember that, and don't get sucked into day trading by the cool aspect and the fun aspect of it. Essentially what day trading is it's gambling. And the last thing I tell you guys, do not invest in trends. A few years ago, there was a doll that was auctioned off for thousands of dollars just because it was rare and collectible. Today, the doll is worth nothing. Other examples of trend investing is things like baseball cards, Pokemon cards, all these objects that really don't have any value and is purely based on customer demand. If people's interest keep going up in that product, yes, you are going to make a profit. But for how long exactly is that trend going to last? Nobody really knows. So keep that in mind before you get into trends. Do not get into trends. So keep that in mind when your friend comes over to you and tells you that this is a really cool thing that's going to be worth a lot of money tomorrow. Do not invest in such things, because you will most likely regret it sooner than you think. If you guys have enjoyed this video, and if you haven't already, please hit the like button, turn it blue. Catch you in the next video. See you.